mean reversion algorithm. So here is a graph of it, right? Here's the mean reversion. The blue line is our strategy. The yellow line is Bitcoin. And you can see that we are beating Bitcoin by a very nice margin. And what this strategy does is it's basically it's a mean reversion algorithm. So what that means is that assets, they tend to go in a specific direction. They tend to go up or go down. You can identify which direction they're going in. But basically, when they move up too quickly or fall too quickly, then that tends to present a buying opportunity, right? Because they don't to get rid of these jitters kind of thing, right? So what we do is we basically look at two technical analysis indicators. We look at RSI and we look at Bollinger Bands, okay? RSI is basically a measure that says is something overbought or oversold. Typically, when RSI is over 75, then we say that it is overbought, right? Which means that it's probably a good time to sell. The market's probably overheating. It's probably a good time to sell. And when RSI is below 25, we typically say that it's oversold, meaning that people are maybe a little too pessimistic and it could be a time for us to jump in now, right? So we look at the RSI and then we confirm with our Bollinger Bands. If you guys have ever seen Bollinger Bands, it's basically, looks like this. Let me pull this up. Bollinger Bands. They look kind of like this, right? It basically takes your asset, right? And hopefully you guys can see the whole thing here. It basically takes your asset and puts a kind of like a bubble around it, right? And if you break out of these bands, so here's our upper band, here's our lower band, and then here's our moving average in the middle, right? Basically, it uses standard deviation to figure out how wide these bands are. And whenever we move above the band, we say that this is probably overbought, right? We're getting a little bit ahead of ourselves, right? So it's probably a good selling opportunity in one of these kind of areas. And if it's below the lower band, it's probably a good buying opportunity because we've probably gone a little too ahead of ourselves in terms of selling, right? So what we're doing is we're paying attention to both RSI and Bollinger Bands. They confirm each other. When they both confirm, that is when we end up placing a buy or a sell order. Okay, so we're constantly buying and selling, staying within the middle, right? And this is the result that we got, right? Here's the backtesting result. Blue is a strategy. Yellow is our benchmark or Bitcoin. You can see that we smoked the benchmark. Again, here we see, in this case, we did about double the returns of Bitcoin, 60% versus 30% over this time period. I have another example here from a different time period. Is our trend following mean reversion? There it is. Here's another time period, right, over a longer time from 2021 January to 2022 May. I think May is when I actually ran this, so I just had that data up until then. But you can see the blue line basically quite stable going up as compared to Bitcoin, which is doing a lot of this up and down stuff, right? In this case, you would have made 122% on your investment versus the Bitcoin would have only made you about 35%. So we're making something like, was that 3 or 4 times more than Bitcoin? Pretty incredible per year, and think about that compounding. But then not only that, but we're also taking on a lot less risk, right? So the max drawdown in this case for Bitcoin was 53%. Our max drawdown was only 30%. The Bitcoin's volatility was 64%. Our volatility is only 47%. So taking on less risk and getting higher returns while we're at it doing this. So pretty damn good strategy if you ask me, right? So Justin asked the question, how does it react to false breakouts? So this is, this algorithm doesn't pay attention to that. We can actually code it to pay attention to stuff like that if you wanted to. But I'm very much of the mind saying, when we make an algorithm, if you get good results, backtesting, stick to it. You know, don't try to get all fancy, right? A lot of times trying to do things like that, paying attention to false breakouts, whatnot, maybe it works, maybe it doesn't. What I would want to do is I'd want to put that into the strategy and then back test it, right? Run it based off of past data. And I would ask the question, does that even matter, right? These false breakouts, is that even going to make you have any higher return or not, right? Because a lot of times, you know, you talk about this fancy language a lot of these traders use. Sometimes, to be honest with you, it's a bad idea to do it, right? So what I would do is I would actually take this, and if you wanted to, Justin, you and I, we could even get on a call. We could modify this algorithm to pay attention to false breakouts. We see, does that make this thing work better or not, right? Maybe it makes it work better. In that case, amazing. Maybe we have something that makes us 200% a year, right? As opposed to 100%. But maybe it doesn't, right? So I think being able to back test and see how this would have done is very important, right? So very good question, Justin. Thank you for asking. And again, this doesn't pay attention to false breakouts, but we can definitely code it to do something like that if we wanted to, right? It actually should be something pretty simple. These are the kind of things, if you take our full course, we actually build algorithms in like 30 minutes on our courses. Right. We can modify all these things quite easily. So if you're interested in doing some of that stuff, we can definitely get on a call and we can go through that and test that out. All right. Good question, Justin. Thank you. All right. Okay. So that's two strategies. I'll show you our custom ETF. I showed you our mean reversion.